Hey, Ivan from the EV Stock Channel here, and today I'm going to be visualizing Tesla's Q2 earnings, but before we begin, thank you to all the Patreons that make these episodes possible, and as always, all content is my opinion only and not financial advice. So let's get started by jumping straight into Tesla's revenue, which came in at an all-time high record of $24.9 billion. Now, when we look at Tesla's energy revenue, we can see that the results came in just shy of a new record, but Tesla is in the middle of constructing a number of big energy projects around the world, while Tesla's Lathrop energy facility is still continuing to ramp.
As a reminder, storage volumes are typically volatile sequentially based on the types of projects and their specific revenue recognition milestones.
Meanwhile, Tesla services revenue hit an all-time record, cracking over the $2 billion mark for the first time. However, we didn't get much news relating to insurance or Tesla's supercharging agreements that Tesla have recently made with other manufacturers. But all in all, great quarter for Tesla services revenue. Next up, here is Tesla's price to sales ratio, which has now risen back to 8.3 from its lows of 4 earlier this year, but still in the middle of its range over the last few years. Moving on to one of the most talked about metrics, Automotive gross margin, which came in at 18.1%, the lowest for Tesla over the last 3.5 years, but still the best in the business by far when it comes to EVs. I mean, I think the only other EV manufacturer that is making profits at the moment is BYD, and they're making a fraction of the profits that Tesla is making. Anyways, getting back to Tesla, so what's behind this drop in margins? Well, Tesla vehicles have reduced in price by an average of $10,000 over the last 5 quarters, while at the same time costs to make the vehicles have only reduced by around $4,000 over that same time span. However, keep in mind, Tesla is still ramping up 2 factories in Giga Texas and Giga Berlin, so as those factories hit scale, cost of goods should decline.
Can you give an update on when you think automotive COGS per vehicle could be under the historical $36,000 per vehicle level, and what are the key puts and takes to get there?
Yeah, and we're still early in the cost down curve of Austin and Berlin.
Yeah.
And so it takes time to work the cost out. At first, it's focused on ramp.
And then quality cost.
Yeah, and then once that stabilizes, we can divert bandwidth to cost reduction. The sequential cost reduction, it might be the largest we've had in a while. So I think it's great work on behalf of the Tesla team, and we just got to keep it up.
Yeah, it's a game of pennies. It's like Game of Thrones, but pennies.
So while auto gross margins have dipped slightly, Tesla's energy gross margins have jumped to 18.4% as Tesla is scaling their Lathrop Megapack factory. So looking forward to see if Tesla can get this into the mid-20s, as they have previously mentioned that's what they're targeting.
For our energy business, we improved margins and gross profit, driven by cost reductions and deal economics, particularly with Megapack.
And more good news with services gross margins continuing to track up, although it would be great to get some more insight into this aspect of Tesla's business. So putting revenue and margins together, Tesla's net income came in at $2.7 billion, not a record high, but still impressive considering Tesla is massively expanding on many fronts.
Frankly, I think it's ridiculous that we have positive free cash flow in a capital-intensive business while investing massive amounts of money in new technology. That is super hard.
When looking at the price to earnings ratio, we can see that Tesla's PE is back in the middle of its range, but still hard to believe that it dropped all the way down to 26 earlier this year. Next, we can see that Tesla continued to pay down long-term debt, with the Q2 figure coming in at just under $1 billion, while interest expenses dropped down to just $28 million for the quarter. And on the flip side, Tesla's cash position increased to a new record high of $23.1 billion, while interest income has increased to $238 million for the quarter, meaning that Tesla should be just fine if interest rates stay high or if there's an extended global recession. So in summary, Tesla are improving on most metrics of their business, while gross automotive margins are down slightly from last quarter. But for those willing to look beyond the short term, the big question is going to be, how fast is Tesla progressing towards solving autonomy? And that's where things really get interesting.
I'm confident, we will deliver over the long term, but can't control short term. So, and the autonomy is really where it's at.
So hope you enjoyed this quick visual recap of earnings, and till next time, I'll catch you guys soon.